Let's start with the technical structure because, understanding why this breakout is different really requires knowing what came before. Hbar has been trapped in a descending channel for months. That's a pretty predictable pattern where price bounces off established resistance, gets rejected, and then falls back down. The pattern just repeats until supply exhaustion occurs. Hbar tested that descending channel resistance 4 times. The first 3 times, price broke above and then got absolutely crushed back down. Sellers defended the level aggressively, weak hands capitulated, price returned inside the channel. This happened repeatedly. Each time, traders lost conviction that the breakout was real. They became conditioned to expect rejection. That conditioning is important because it affects how the market reacts to the 4th attempt. That's exactly what Analyst Bmendo is highlighting. The 4th breakout attempt is happening right now, and this time, price is actually holding above resistance instead of rejecting sharply. Here's why that matters. Repeated pressure on resistance weakens supply over time. Sellers are willing to defend a level, but they only have so much ammunition. Each time price tests resistance and bounces back down, some sellers exit. They get tired of defending. They capitulate. They realize the effort to keep price down isn't working. After 3 failed breakout attempts, sellers are exhausted. They've defended the level. It didn't work. Now a 4th attempt comes, and this time, there's not enough selling pressure to push price back down. That's the setup Bmendo is describing. This isn't random. This is technical exhaustion creating a potential breakout. The timing is important too. Bitcoin regained upward momentum. That provided liquidity and bid support. Hbar jumped 12% when Bitcoin was rallying. That's not a coincidence. Bitcoin provides the broader market momentum. Hbar seized that momentum and broke through resistance that previously held. Relative strength matters more than absolute price movement. A 12% move means nothing if Bitcoin moved 15%. But if Bitcoin moved 5%, a 12% Hbar move signals independent strength. That's what happened here. Hbar outperformed the broad market while Bitcoin was rallying. That suggests capital rotation to Hbar specifically, not just riding Bitcoin's coattails. Now let's look at the supply side because price movements are determined by supply and demand interacting. Hedera has a fixed supply cap of 50 billion Hbar tokens. That's the maximum that will ever exist. Currently, the Canary Capital Hbar Spot ETF is already live. It's trading under ticker Hbar. And here's the key detail. Canary Capital already holds more than 1.3% of total Hbar supply in custody. That's significant. When ETF products accumulate tokens, those tokens move into regulated custody structures. They're no longer on cryptocurrency exchanges. They're held in institutional-grade vaults. That reduces the available float, the tokens that can be actively traded on the market. Lower available float means less supply for buyers to absorb. With the same demand, lower supply creates higher prices. It's simple supply and demand mechanics. Here's where it gets interesting. There are more than 15 additional Hbar ETF filings currently awaiting regulatory approval. Major firms like Grayscale Investments and Bitwise Asset Management have filed Hbar ETF products. These are not small players. These are institutional asset managers with billions under management. If those 15-plus ETF filings get approved, and they likely will eventually because Hbar meets the criteria, each one will accumulate Hbar tokens into custody. Grayscale could hold millions of tokens. Bitwise could hold millions. Multiply that across 15 different ETF filings, and you're looking at potentially hundreds of millions of Hbar being removed from exchange float. That creates a supply squeeze. The available tokens on exchanges shrink. Demand remains constant or grows. Price discovery happens at higher levels because fewer tokens are available to satisfy buying pressure. Bmendo is pointing out that this supply dynamic coincides with the technical breakout attempt. The timing isn't random. As ETF custody accumulates Hbar, float tightens. As float tightens, resistance levels become harder to defend. As resistance weakens, breakouts become more likely to hold. This is the convergence of technical and fundamental factors that create explosive moves. The technical setup shows the resistance is breaking. The supply dynamics show why it's breaking. There's just not enough available supply to push price back down. Beyond the technical and supply dynamics, Hedera itself has characteristics that make it stand out from other altcoins. Understanding this matters because it affects whether institutional capital will chase this breakout. Hedera operates on hashgraph consensus, not traditional blockchain architecture. Hashgraph is a directed acyclic graph protocol that's fundamentally different from how Bitcoin or Ethereum work. It's not better or worse, it's different, and that difference enables specific performance characteristics. Hedera advertises throughput above 10,000 transactions per second. Bitcoin does about 7 per second, Ethereum does about 15 per second, Hbar doing over 10,000 per second is, well, orders of magnitude faster. That's enterprise-grade throughput. The network also has fixed fees, near 1/10,000th of a dollar per transaction, not variable fees that spike when networks are congested. Fixed, predictable fees. That's appealing to institutions because it allows budgeting. You know exactly what transactions will cost. Here's the part that matters most for institutional adoption. Hedera's governing council includes Google, IBM, FedEx, and Dell. These aren't small companies. These are Fortune 500 enterprises. That governance structure signals something important. Hedera isn't an anonymous project. It's backed by establishment institutions. For institutions evaluating whether to allocate capital to blockchain infrastructure, that matters. It reduces regulatory risk. It reduces execution risk. It signals legitimacy. Bmendo argues that this enterprise positioning and predictable fee structure appeal to institutions seeking compliance clarity. Institutions don't want to build on anonymous projects. They want governance they can understand. They want clear regulatory pathways. Hedera provides that. The network is also integrating with Axelar, which expands cross-chain liquidity channels. That means Hbar can interact with other blockchains more easily. Exchange support upgrades including EVM and HDS compatibility widen access for traders and developers. All of this, the technical performance, the fixed fees, the enterprise governance, the cross-chain interoperability, creates a compelling narrative for institutional adoption. When you combine that narrative with the technical breakout and supply squeeze, you get the setup Bmendo is highlighting. If you're understanding that Hbar's breakout is backed by technical, supply, and fundamental factors, you need to like this video right now. One click helps the algorithm reach traders who understand setup convergence instead of just chasing price moves. Plus, share this with other traders watching the altcoin space. They need to understand why this breakout is different from the previous 3 fakeouts. Here's the critical insight that, honestly, most traders miss. Bitcoin sets the market tone, but relative performance actually reveals where capital rotates. When Bitcoin rallies, capital doesn't just stay in Bitcoin, it branches out into altcoins. The real question is which altcoins capture that capital flow. Hbar jumping 12% while Bitcoin tested the upper $60,000 range is, well, that's relative outperformance. Bitcoin moved about 5 to 8%. Hbar moved 12%, so that's 4 to 7% additional upside, independent of Bitcoin's move. That independent strength doesn't happen randomly. It happens when capital specifically chooses an altcoin over staying in Bitcoin. Capital looks at Bitcoin rallying, takes profits, and then rotates into what it believes is an undervalued altcoin with better upside potential. Bmendo notes that this relative outperformance is not typical for weaker altcoins during early Bitcoin expansions. Weak altcoins usually get crushed during early Bitcoin rallies because capital flows to Bitcoin, not away from it. The fact that Hbar is outperforming suggests capital sees something differentiated about it. So, that something is really the combination of factors we talked about: a technical breakout, a supply squeeze, and, yeah, those enterprise fundamentals. Capital sees this setup and starts rotating into Hbar. This is the signal we're looking for. It's not just about the absolute price move. It's really the relative performance that matters. Bitcoin's rally, it provided the liquidity backdrop, but Hbar's relative outperformance, that shows capital is specifically choosing Hbar. If this setup keeps going, the capital rotation could actually accelerate. Early adopters of the Hbar rotation, well, they get in ahead of institutions that eventually spot the same setup. And that's how those explosive moves happen. Early relative outperformance attracts attention. Attention brings in more capital, and that capital creates price momentum. Let's be honest about the risks here, because breakout setups don't always work out. Hbar's price is still trading way below its previous cycle highs. The last 3 breakout attempts, yeah, they failed, so there's just no guarantee this one is going to succeed. Breakout holding really depends on a few key factors. First, sustained Bitcoin momentum. If Bitcoin crashes, Hbar is probably going down with it. Second, continued ETF approval. If regulators decide to slow walk those 15 pending filings, the supply squeeze just doesn't accelerate. And third, actual demand. If capital doesn't actually rotate into Hbar, well, the breakout fails. So, it's all about these factors lining up. So, Bmendo isn't predicting a moonshot here. He's really just highlighting a setup that's building right now. The execution, yeah, it still needs to happen. But honestly, that's what makes this so interesting. The setup is real, the factors are all aligned. The real question is whether the market recognizes it before the price explodes or after. Early traders who spot the setup, well, they get better entry prices. Late traders, they're the ones chasing momentum at higher prices. The risk reward? It's actually pretty favorable if the setup works out, and the downside is limited if it fails and price just returns to the previous range. That's a trade worth considering if you understand the setup. Alright, so here's what you should really monitor to see if this breakout is actually legitimate. First, watch if Hbar holds above the resistance level that previously rejected it. That's the critical test. If price returns below resistance, then honestly the breakout failed. But if price stays above, conviction is definitely building. Second, you want to keep an eye on Bitcoin's momentum. If Bitcoin crashes, Hbar is almost certainly crashing with it. The setup only works if Bitcoin provides supportive market conditions. Third, track the ETF filings. If regulators approve more Hbar ETF products, the supply squeeze just accelerates. If those approvals stall, the supply thesis definitely weakens. Fourth, watch for capital rotation. If other altcoins outperform Hbar while Bitcoin rallies, that means capital is rotating elsewhere. But if Hbar continues outperforming, capital is specifically choosing it. These are the metrics that really determine whether the breakout holds or fails. Thank you for watching this setup analysis. Hedera's Hbar breakout is backed by real technical, supply, and fundamental factors. That actually makes it worth monitoring, even if the move doesn't immediately follow through. Bitcoin's movement towards $70,000 is definitely capturing headlines, but honestly, the real trading opportunity might be in projects like Hbar, where relative outperformance and supply dynamics are converging. If you want to stay updated on Hbar's progress on this breakout, when ETF approvals happen, when supply metrics tighten, when relative performance shifts, stay subscribed. We're tracking setup convergence that precedes explosive moves. Check out the other videos on TJ Crypto World. We've got deep dives on technical analysis, supply dynamics, institutional adoption signals, and everything else you need to spot setups before they become obvious. I really appreciate you watching. I appreciate the analytical community, and I'll see you in the next setup analysis.